I think the secret phrase for this week for me is hedging.
Interesting. Elaborate. What are you hedging with?
Well, I did some VIX hedging yesterday as well as ES. So hedging with the S&P futures market. I'm trying to make
buying calls on the VIX, or what are you?
I'm buying a call. So I did a couple things. I've already got some in the money calls at $10 and $10.50. So that's essentially like full. If price goes up, then it'll be like essentially owning the VIX. But I also went out to the end of September and did a $20 out of the money call. I paid $1.65 for it. If I'm anywhere right on this, if we get a move on the VIX from, let's say, 12 and change like it is now to 20, that's really the move that I'm after. So I could turn about $1.65 into, maybe $5 to $6 of credit. So it'd be about a 3 to 4 to 1 hedge. My 1050 call, that would be, I'm trying to think here. I can turn a 450 debit into a 950 credit if we poke to $20. The bigger hedges for me are the ones that are the ES, so your S&P E-mini futures. Those pay like 20 to 1. They're way out of the money, but I did it where it cost me in my margin accounts, cost me nothing. I actually hedged for $100 credit that pays up to about 20 grand in hedging. And then I also did about a $350 debit in my IRA accounts because I wanted to make sure that the buying power wasn't sucked to nothing. So, but same thing. It's like I paid $350 for a hedge that pays out potentially, 20 grand. So, anyway, I'll explain why. You said elaborate. So, could we stretch this week, Nick? Nick, we have CPI data on Thursday. What's the last CPI move that we had? We just had a massive gap higher, right?
Yep. Because it was a good number, I think, last time around.
So it was a good number. The forecast for this go around is 3.1. You're sitting here talking about what Powell's comment is, what the testimony is going to be for the next 2 days, but it's all going to boil down to what is inflation on Thursday, what's CPI data, what's year over year. Look, 3.1 would be okay, but it doesn't change. Like, it's not a new low. If you pull up the Edge Finder, what was our lowest over the last 12 to 24 months? Probably 2.9. Was that at one point we're like, oh my gosh, we have so much deflationary pressure now? Does that sound right?
Yep. I think, yeah. So we came down to 2.9 and then have now kind of bounced back. And really, if you're looking at CPI, it's been flat for for some time here. It's been really unchanged over the last year. The difference is if it kind of depends which way you slice it up, because if you look at the PPI or if you look at PCE, they're down in the 2s, and then other people will say, well, you're still in the 3s on CPI, and then other people will say, well, unemployment's taking higher. There's some debate here as to whether or not the Fed is going to. I think the big swing would be if the Fed takes more seriously the rising unemployment at some point. I don't think we're quite there where they're going to really show red flags, because we're still coming off of like multi-year lows, in terms of unemployment rate. But it's interesting, Chris. It's an election year too. Is it going to just keep pumping higher if we see a rate cut? That's the other thing is, Chris, I'm only long. I don't know, since I've last talked to you, I ended up closing out my calls on XLK on a dip, and I'm still in them. It's the only thing I'm in terms of stock market exposure, is staying long tech. I bought this back in April. I sold calls once, they expired worthless, sold it again, and I decided to buy back those calls I sold. I'm still in the trade. It's the only one I can really see right now. I would love the rotation trade, but I've got to see some proof of it. And at the same time, I'm trailing a stop on this, because if we don't see the rotation, if we don't see broadening out soon, I think it's a problem. I think it's an issue to have just such a narrow leadership for so long. So I am in the leader, but I'm cautious about it.
Yeah. And so in terms of your cautious, are you in with a stop? Are you in with protection? And again, look, man, this market's sitting here at 556. I'm looking at the SPY right now. 556, we're at, nearly 5,600 on the SPX. I don't know if we're going to see 6,000 on the S&P before we have a meaningful pullback. We've had 340 some trading days without a 2% pullback in a single day.
Yeah, which is
But
crazy.
some ominous signs out there would be that anytime we've had a 0.5 or 0.7% increase in unemployment rate, usually it's followed by a recession. It's certainly followed by a slowdown. I think a couple things I took some note of on Monday. Right here's an interesting mark. So, we still have our sticky inflation.
We have 4 brand new indicators built for TradingView, introducing the momentum, extension zones, trend projections, and volume spikes indicators. All 4 indicators work on every TradingView chart and time frame. You can easily see shifts in bullish or bearish momentum. Look and see if price is being overbought or oversold, which could cause a quick reversal. Automatically get a trend line that shows the true trend, bullish trend, and bearish trend based on the most recent market data. Get notified instantly of big spikes in volume to help you find breakouts. All 4 are available now at a1trading.com and can get set up in just a few minutes. Go check out our brand new line of TradingView indicators today.
This is the running, unemployment rate versus non-farm. The trend of jobs numbers. Yes, we've had jobs numbers, but unemployment rate's been ticking higher. If we go to, I just pulled this morning from I think it's Opening Bell Daily. Monthly bankruptcies reached the levels that we haven't seen since the start of the pandemic. So we're seeing some companies where and there's a lot of ways to kind of get through this, right? I mean, if companies are struggling, we could enter a phase of mergers and acquisitions. That's usually one type of way to consolidate. And I mean, we're seeing high concentration in the stock market, so it makes sense that corporate America would also be looking for high concentration. You've got those that are producing, those that are making money, those that have the cash flow could be buying companies that are struggling for some type of advantage, lower competition. I mean, we could have a pretty serious season of mergers and acquisitions, but it doesn't overlook the fact that we are getting a rise in bankruptcies. We're getting a rise in delinquencies.
Yeah.
I've got a buddy of mine that works with me. He had sent me, let me find his message that he sent me. We do a little session on Sunday together, and he sent me a message. Where's it at here? Mortgage delinquencies are on the rise, which I thought, okay. I mean, look, this isn't, big short type stuff. This isn't 2007, 2008, but things are happening out there that I know the market appears to be ignoring. And look, by no means am I trying to be like a perma bear, because that's the worst situation to be in.
Sure.
But here's some data, right? Recession in the US usually comes in within 18 months from the last Fed rate hike. Well, it's been 12 months. Right? It's been 12 months since the last Fed rate hike. We talked about this inverted yield curve from the 10 and the 2. And at 24 months, it's usually about the average when a recession hits. So, I mean, timing wise, we're talking about a potential rough fourth quarter. If this market's going to embrace a recession and price it in, Q4 is going to be rough. If this market ignores it, we get through the election cycle, we get through the year, and we have a solid Q4. It's hard not to be a little bit more jaded coming into 2025, but that's just where I'm at.
I typically agree, Chris, and that's the thing is like I'm like the most cautious bull that I've been in a long time. Like, because I actually think that if you're in the narrow camp, which I've pulled back to in the last month, I've kind of snapped back to, what? It's the only thing working. I'm going to trade the momentum until the momentum's gone and just stay in the trade, the tech trade that I've been in. I think it's almost a form of bearishness to a degree to just say, I'm just going to stay with the leaders and I don't trust the rest of it, because historically speaking, that can last some time. Narrow leadership, obviously it's lasted a long time here, but it can last a while. The Russell's like 4 years of vastly underperforming the S&P 500. The RSP is just up a couple percent on the year. Meanwhile, the weighted S&P 500 is up like 17. I mean, there are so many problems here that I see in the narrow leadership. And that is, again, why when you actually look at my actions personally, I'm long the only sector that I can really justify, which has the earnings, which is technology. Like they're, as you just mentioned, they could use all that cash flow to buy companies. The demand for chips is strong, but clearly that demand for chips, the AI trade, Chris, is not broadening. It's not showing up in the other areas. I'm concerned about the Russell. I want to buy the Russell so bad, but I am still waiting for the growth to materialize, and then I could build some positions in other areas, maybe buy the RSP, maybe buy the Russell. But I've got to see, the growth stay strong and inflation come down. I'm just struggling with it. So that's where I'm kind of back to I'm long gold, silver, and I'm just going to trail stops on the one thing I have that's working, which is tech. But it's a tricky market, man. I mean, it's like if you're not in the tech, it's like everything else. I mean, semis, technology, and comm services are up. Everything else is just okay. I mean, it's not terrible, but it's just not great. So it's been a frustrating time. And again, I think that, to be honest, if you look at historically, like thin leadership usually doesn't end very pretty. So yeah, we need to either see the broadening or I'm going to stay pretty cautious about this market. Any updates since yesterday in terms of your USD outlook?
Not fundamentally. There is the support you've got drawn, well, I guess it's resistance now, where price is just at like current market price. To me, it looks a bit like a break and retest. So it's kind of, I'm a quite a big lover of a break and retest when looking at trends.
Yeah.
So to me, I've got a bearish bias on the dollar at the moment. So I'm kind of looking for that at the moment, just a continuation of this move to the downside. We've had the EMAs cross as well. This is the 50 and 200. So yeah, we did see a bounce off this trend line. So it's going to be interesting to see if it can sustain prices above, or if it does finally have that break below. But yeah, I've got some open positions. I think we spoke yesterday actually about the USD CHF. So I executed that actually not too long after our stream.
Oh, nice.
So yeah, it was a bit of a premature entry, quite aggressive, but it's coming back down to entry now after some drawdown. But yeah, looking for lower prices on the dollar overall.
Okay, cool. And also, I think you were long silver, right?
Yeah. This is our long silver position. It's currently break even, so it's very similar to your gold trade, I think. But yeah,
yep, I've got silver and gold, so that's cool that you've got kind of a similar outlook on that.
Yeah,
silver up almost 1% today.
Yeah, no, it's doing really well.
Yeah, so silver and gold, I'm curious, with the dollar, there's also just so many catalysts, or I like to say shots on goal, like potential things that could drive gold and silver higher this year. To list just a few of them, you have central banks buying it. You have central banks also cutting interest rates globally. You've got concerns about geopolitics and the elections going on globally. I mean, I just like the story for gold and silver, and I'm glad to see you're kind of on the same camp, at least with your silver idea. How would you manage that silver trade that you have?
Well, it's let me have a quick look. So we've got a hard take profit at 35.8. So yeah, it's a case of just trailing stops until take profit. I don't think this would be one we'd manually close out of unless there was some change in the global state. But yeah, it's kind of just a set and forget, really. Just protect it with a trailing stop and leave it. But yeah, as for gold, I mean, there's still, like you said, there's a lot of factors in play. We still have a lot of buying of gold by sort of the larger market participants, shall we say. So it's not like there's any selling of gold, really. China slowed down their gold reserves, but they're still buying just a much slower pace, which is still a green flag for gold in my book. So yeah, I think it's definitely the year of commodities. I don't see any reason to be sort of either selling them or closing positions. I think it's still wise to be either staying in long or looking to go long.
Well, and one thing you added about the kind of situation with China slowing purchasing, I think of it about, if you just kind of logically think, if you're the central bank of China and you are like out to buy gold, it's only natural to say, they were buying it for many months. So buying. Oh, it goes up a bunch. And you just say, okay, yeah, we're just going to pause. But as you've just said, they haven't completely stopped their purchasing, but also what if that's just kind of a, we're going to say we're slowing so that maybe price can go down a little bit, but there is supporting buyers in the Bank of China, the Chinese central bank, that's saying, any dip, obviously, like, they were buying it over here. So a dip in gold is probably somewhat supported by central bank buying. It's like, it's just natural. If you're trying to accumulate gold at the lowest possible price, and the Chinese, central bank has a lot of US dollars to get rid of, they may just buy dipping opportunities. So to me, it's kind of another positive, is like you have that backdrop of central bank buying, probably steady and consistent, but maybe accelerates if the price goes down. So it's almost like a supportive measure to a degree.
Yeah, absolutely. I've got a friend that works at I think ACY Securities, which is a broker in Australia. I was having a discussion with him at the start of the year about gold, and he's been bullish on gold for a very long time. And he was saying that it's not even a question of buying or selling; it's more a case of treat it. Obviously, viewers don't take this literally. I'm not saying go and buy gold now, but at the time, it was a case of treat gold like an indice or an investment, in terms of just keep adding on to buy positions, because this whole year there's not really been any reason to sell. It's been a very, very bullish market, and it's been essentially free money if you could look at the economics and look at where gold is going and why. It's very clear buy positions, really.
Yeah. No, I mean, I obviously agree. Gold has been like my biggest kind of play this year. The other side has been technology. So I've been right in some ways, wrong in other ways. Obviously, the thing is, you can always kind of point to what you shoulda, coulda, woulda done. Like, even though I played gold well this year, in hindsight, I should have just been 100% long technology, because that's the winner. But nobody knows where, the market's going to go for certainty. So I feel like, as you've said, there hasn't really been a huge bear case for gold that's come in this year. In my view, I've had mostly a bullish view almost all year long. Technology in general. I've mentioned that it's the only sector right now that I have long positions in. I did have an XLE position, but I got stopped out of it. So I was looking for energy to keep going, but with cooling jobs data, I'm a little bit more cautious on that now, because oil prices may be due for a little bit more pullback with a slowing economy in the US. If that is going to be the theme here, we may see oil come down a little bit. So what else are you watching? You have any ideas or trades that you're in currently, James?
Yeah, well, I'm still planning my big short on the pound. So there's a bank report that came out yesterday from UniCredit, basically highlighting the same thing that I've been discussing, and it's the first time I've seen it mentioned by an institution so far. And it's basically just saying that the economy is, it's facing huge problems, low productivity, high cost of living, to a surge in economic inactivity. We've also got an energy crisis going on, and Labour, it's a case of Labour's said that they can fix these problems, but their plans to address are too timid to make a significant difference, and that's exactly what I think. And they've actually got all the data here to sort of back that up, which is nice. So that's
really interesting.
Yeah, I can go into that. I'll put it on Twitter or something after this. But yeah, it's I've been saying this for a couple of weeks now, but I am a perma bear on the pound. Although in the short term, I don't see any reason it couldn't go higher. So we can see here, this is another report by MUFG. So the pound is the best performing G10 currency this week, helped by expectations and our confirmation of the largest majorities for the Labour Party, which I think we all know that by now. We also have pressure on the euro, and then MUFG is recommending a long position on the Australian dollar, which again goes to my thesis. We've got a very strong Australian dollar, and we have done for quite some time now. And I'm also looking at the dollar bearishness. So I think, this week, well, in the near future, it's definitely shorts on the US dollar, longs on the pound for now, and then obviously longs on the Australian dollar, because I think it's, at the moment, we're in quite trending markets. We've got the yen and the Australian dollar that can be quite easily taken advantage of on pullbacks. So yeah, not too difficult to be a trader at the moment. You've also got the commodities markets that are doing quite well. So yeah, I think it's very, very clear, really.
Yeah, and James, I just wanted to pull up on the major currencies front on the Edge Finder. You mentioned a couple of charts there that beautifully kind of line up with your idea. So you've got in the short term, it's got pound USD bullish. I've actually been looking for a long position on AUD USD as well.
Yeah.
And it's got the strongest reading currently on the Edge Finder. Inflation out of the US this week will be impactful to this score potentially. But at the very least, there's just a number of things here that kind of show some strength for the Aussie dollar. And so, I've got this level marked up here. I'm if I can get this pullback, I may look to take a position on this when I'm watching this. I'm also watching EU in the short term for potential bullishness if I can get a setup there. But I'd love to see like a break of like 109. So we'll see. That would probably coincide with a break lower on the dollar index down to like 104. So that to me is a big trigger too. I think if you get 104 breaking, that's probably a very good signal that likely rate cuts they're coming once or twice even for sure in 2024. So we'll see what happens with that.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful free content in the description below and on our website a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.